Hello. My name is Benjamin. Okay. What I want to do is a documentation of the knowledge that I've gained so far about how the market actually works. Okay. Um, I just want to do a quick video to help me understand how price movement actually works. Okay, in the market, and in order to do that, during my course of dealing with Bitcoin over the past 6 months, okay, I've been enlightened to a lot of things. I've been, I've seen a lot of things, okay, I've seen a lot of things, and with my experience in the market, I'm able to correlate what I'm seeing here and then what I've been dealing on the forex trading industry. Okay. Um, Before me here is a broker's order book, a typical example of a broker's order book. Okay, this is how a broker's order book looks like. What he sees is another broker. Okay, as the forex market that you are into is brokers trading among themselves. Okay, the first market is brokers trading among themselves, not we. So what he sees is something like this, some willing this is this what we have here is some Bitcoin to US dollar. Okay, so for instance, a broker has Bitcoin and he wants to acquire US dollar. Let's say he have about 1,000 Bitcoin and he wants to get US dollar. So the process of getting the dollar, okay, is gradual. We call it accumulation. He's trying to accumulate dollar at the most cheapest price based on the current price in the market. He wants to get from the public from the most cheapest price. So what he sees is something like this. He sees someone offering to sell to buy his Bitcoin. Okay, someone offering to buy Bitcoin, $53 worth of Bitcoin at 62. Another person offering to buy $550 worth of Bitcoin at 1063. Okay, the current price for Bitcoin is let me see. The current price for Bitcoin is about 1086. Let me refresh. Okay, it's about 1086. I just refresh that page. Okay, so what he sees is that he starts buying, he starts accumulating gradually at different price until he gets the lowest price he wants, and finally spends all his Bitcoin. So these guys are the ones controlling the market. The market shifts from one broker to another. So if this guy, for instance, let me say the Bitcoin total volume is about 1,300, and this guy has 1,000, meaning he's kind of in control of the Bitcoin market. Okay, so um, he looks out for people who wants to buy Bitcoin and the amount they are willing to buy. So he distributes to them until finally he gets the lowest price, and he sells to that person. And the one who bought the most now becomes the controller of the market. Okay, and that guy has bought at a low price. Okay, he has bought the Bitcoin at a lower price. His intention will be to sell again to another broker at the higher price. So the way the forex market works is even the Bitcoin, it's not like somebody is in possession with 50% of the world entire Bitcoin. Okay, so some people sell and some people buy. Okay, so the process of accumulation, as you can see, is gradual, and he sells um to who he wishes. Okay, and after selling at a lower price, he sells his dollar back at a higher price. Okay, that is what actually happens. And when he wants to sell, he goes back to his other order book to see the volume of people willing to buy dollar and for him to get back Bitcoin. So the Bitcoin he bought at about 1060, 1062, 1063. He now sees people willing to buy at a very nice price, 1081, 1082, okay, 1083, until finally we see 1090. So what happened is this. Before the change of the market, we'll see the highest accumulation on the forex market. We call it tick activity. This is tick volume. This is tick activity, as in buying to selling activity. Okay. So if a market is to move significantly, I'm expect to see the highest volume of accumulation at the lowest price. Okay, at a very low price. We'll see the highest volume of accumulation at a very low price. Okay, in a downtrend, as the trend is coming down, we'll see the highest volume at a lower price. And as it is going up, if the market is to sell, we'll see the highest volume at a higher price. Okay, at a good higher price. That's what we're supposed to see in the market. Okay, so moving on to the forex market. Actually, I trade the market here at about this level. I sold and I moved out at about this price level. Okay, based on what I'm about to show you now, based on what I'm about to show myself, because this is my documentation. Okay, I sold here based on what I'm about to show you now, and my intent. Okay, what I perceive that they are doing is to distribute here after accumulating, or show you where they accumulate later, is to distribute here and then later accumulate at this price zone, at this area. Okay, so I'm expecting this market to drop from where I sold to this place, but I actually went out the market here. Once you understand how this market works, you can be okay with 5 pips or 10 pips. Okay, because you know you've made something and you know where it was going, and if you are trading 1 pip $10, you must have made $50 to $100 from that move. Okay, so I pulled out here at about 22, 23 pips. Pull out somewhere here. Okay, this is on the picture of the trade I closed. Okay, I sold here. All right, I sold here and I pulled out there. Okay, this is a 4-hour view of the trade. This is a 1-hour view of the trade. I told you about. I sold and I pulled out. Okay, my plans was to take profit here, but because of this video, I want to monitor the market. I had to close the trade and continue. Okay, so what actually happened is this. Let me go to the 4 hours chart. If the market is all about intent, okay, it's all about intent. If the broker's intention is to accumulate at a lower price and sell back at a higher price, okay, what we are going to see at the bottom, or as price goes down, is you see some minor accumulation taking place as it buys back from another broker and the public, okay, as it buys back from another broker, until finally those that are selling have exhausted all their sell, okay, and the price starts going up until finally they've exhausted their sell, and market have shifted from the bears to the bulls, and the bulls have accumulated enough, and then the price will start going up. Okay, that's what you see in the market. So if his intention is to accumulate and to mark price up to a higher price, if his intention is to accumulate at a lower price, to buy at a lower price, buy different price range at a lower price, and to sell back later, what you will see is this. At a previous sell zone, we are going to see, at the most recent sell zone before the accumulation, we are going to see less selling activity. Okay, because it's coming from them, we know that for instance here, we saw some accumulation taking place here with these pins, okay, being accompanied by high volume. This one has no really high volume here. There's no really high volume here. Okay, though it's okay. This my 4 hours chart. Okay, any volume at about this red line, this sigma, Any volume at about this sigma is relatively okay, partially okay for me. Well, I like here, okay. I like sigma 3 and above. So what we see here is we saw some sell out here, and the market buying back. Saw some sellout from this price level down here and some accumulation taking place, and I saw another accumulation here with these pins. This is an area dominated by the bulls, okay, so by the buy volume, okay, and it's more than 50% the entire candle range. And as it goes down, we saw another price move, another accumulation here, okay. And if its intention is to take price up, the moment price gets to the most recent sell level, which was this, my expectations will be to see less selling activity, okay. That simply means that he is not interested in selling, and his intent is to take price higher, okay. So what will happen is that our price get back to this level, the volume of sell should be lower, okay. The volume of the bear candles should be lower, should not be significant, should not be up to this level on my 4 hours time frame, should not be up to this level. The volume should be lower, okay. So if you see what happens here, we saw some dramatic selling coming up here, okay. These are based on leftover sell orders. This was the previous sell zone. So what happened in the market is that as price revisit a previous sell zone, we see um, the same activity taking place most of the time. We see the same activity taking place, but not to continue. If the intention is to go up, if the intention is to take price higher, this sell activity should not drive the price lower, significantly lower below the accumulated zone. Okay, should not drive the price significantly below the accumulated zone. So we also see some sell volume here until the sell orders that were here, the leftover sell orders that were here, are exhausted. Okay, and once it's exhausted, we see the real intent of the price. Our price gets, we see higher close of the bull candle and possible continuation to the most recent sell zone activity, to where the market last sold again. Okay, so if you see it happens like that, we saw some dramatic selling just before the zone, we saw another selling, okay, and we saw another selling, and accompanied by low price activity, telling us their intent is not to sell, okay. And after that, within the accumulated zone, the price bought back again because nobody is actually selling. Nobody is selling, and this actually there are no sellers. And as it gets back here, if you're looking at a lower time frame, say 15 minutes time frame, okay, you see that the selling was less, and price continue higher, okay. But as we can see, we notice another sell activity taking place here. So if I go to my 1 hour time zone, if I go to the 1 hour time zone, just before that selling was a buy. Okay, let me see, drop down to 15 minutes. Where was I? Okay, so if I drop down to 15 minutes, you see as price moves on, there will not sell activity at that level. Okay, there will not sell activity at that level. Okay, as price moves on, there will not sell activity at all at that previous sell dramatic level. And what happened? The news came out and price marked up. Okay, the price moved up. So if you see, just before price moved up, there was an aggressive selling again at a previous sell level. Okay, so now we see another phase of what they accumulated at the bottom, and the further accumulation here was distributed here based on information that we are not entitled to see. Okay, based on informations beyond our level, but for some reason they sold here again dramatically. So if their intention after this dramatic sell is to go down, at this price level, we are not going to see a lot of buy activity at this price zone. Between here, just mark this zone. Between here and and here where the selling broke on the previous supply zone.